Hey everyone, welcome back to Talk Techers. Today we're taking a deep dive into Polaris's Q4 2024 earnings call. And, well, let's just say it's been a bit of a wild ride. Declining sales, inventory issues, and a whole lot of uncertainty in the power sports market.
Yeah, no doubt about it. Polaris reported a 23% drop in sales for the quarter. And while that's a pretty steep decline, they did make a deliberate move to actually reduce their dealer inventory.
Okay, so holding back on shipments to dealers. What's the thinking behind that?
Well, there are a couple of things at play here. First, they're recognizing that the retail environment is softening. Consumers just aren't buying recreational vehicles at the same pace as before. And second, they're trying to protect their dealers, make sure they don't get stuck with a ton of inventory they can't move.
Right, so it's about keeping those dealers healthy for the long haul.
Exactly. It's a long-term strategy play.
But what about Polaris's own bottom line? This can't be good for their profits, right?
No, it's definitely impacting their earnings.
Yeah.
But they're essentially choosing to take a smaller hit now to potentially avoid a much larger one down the road.
Makes sense. Okay, so let's get into the specifics. Where did Polaris feel the pain most acutely this quarter?
Well, their snowmobile segment was hit particularly hard. They saw a 30% decline in sales compared to Q4 of 2023.
Wow, that's a big drop.
It is. And 2 consecutive weak snow seasons have really put a damper on demand. And remember, snowmobiles are big ticket items, so that decline really hurts.
Yeah, that's rough. So snowmobiles are down. What about their off-road vehicle segment? That's a huge chunk of their business.
It is, and it's a mixed bag there.
Yeah.
While recreational side-by-side saw a decline, their utility vehicles remained relatively stable.
Okay, so people are still buying utility vehicles, but pulling back on the recreational side. What's driving that, you think?
It seems like people are prioritizing practicality over pure recreation in this economic climate.
Yeah.
If you need a utility vehicle for work or around the farm, you're probably still going to buy it. But that new RZR for weekend fun, yeah, that might have to wait.
Right. Makes sense. Speaking of choices, how did Polaris's motorcycle division perform? How did Indian Motorcycles do this quarter?
Well, it was an interesting quarter for them. On one hand, their new Indian Motorcycle Scout lineup was a hit. They actually captured the #1 market share position in the midsize category.
Okay, that's a win for them.
Yeah.
But I'm guessing it wasn't all smooth sailing?
Yeah, no, not exactly. Their heavyweight segment is facing some serious headwinds. They're dealing with new competition and just a generally challenging market for larger, more expensive motorcycles.
So the Scout is doing well, but those big bikes are struggling to find buyers. It all comes down to consumer confidence and what people are willing to spend their money on right now. And speaking of feeling the pressure, are Polaris dealers feeling the heat as well?
Absolutely. Dealers are being very cautious right now. High interest rates and inflation are making them nervous, and that hesitancy is trickling down to consumers. People are thinking twice before making big purchases, especially with all this economic uncertainty.
So it's like a chain reaction of uncertainty.
Mm-hmm.
Manufacturers are worried, dealers are worried, and consumers are hesitant to spend.
Exactly.
And you mentioned earlier that some OEMs are slashing prices to get rid of old inventory.
Right. And that's adding another layer of complexity to this already volatile market. These aggressive promotions are creating some short-term market share shifts, but they're not sustainable in the long run.
No, it sounds like a bit of a frenzy out there, like a clearance sale where everyone's trying to offload inventory before it becomes a liability. But Polaris seems to be taking a different approach, focusing on efficiency and what they call a lean operating model. Can you break that down for us a bit?
Yeah, Polaris is really committed to this lean journey. They actually exceeded their cost savings target in 2024, achieving over $250 million in structural cost reductions.
Okay, so they're getting more efficient, but those savings are getting masked by the lower production volumes we talked about earlier.
Right. It's kind of a case of good news getting buried under bad news. Even though they're saving money on each unit they produce, they're producing fewer units overall. So the overall impact on their profitability is muted.
Right, like having a brand new fuel-efficient engine but being stuck in traffic. All that efficiency isn't doing much good if they can't get the car moving.
Exactly.
But speaking of roadblocks, we can't ignore the potential tariffs on Chinese imports.
Yeah, you're right. Those tariffs are a big wild card for Polaris and the entire power sports industry. If those tariffs go into effect, it could really increase Polaris's costs and put a serious dent in their profitability.
It's like a game of trade war roulette, and nobody knows where the ball is going to land. But even with all these challenges, Polaris is doing one thing right. They're keeping their customers engaged.
Absolutely. Polaris's data shows that off-road vehicle ridership is still above pre-pandemic levels. People are still getting out there and enjoying their RZRs and sportsman ATVs.
So the underlying demand is still there. That's good to hear.
It is. It suggests that once these economic headwinds subside, the power sports market has the potential to bounce back strong.
So there's light at the end of the tunnel. You also mentioned something about repurchase rates earlier. What's the significance of that?
Well, repurchase rates are a good indicator of customer loyalty and future demand. And Polaris's data shows that their repurchase rates for both short-term and long-term buyers are in line with pre-pandemic levels.
So people who buy Polaris vehicles tend to come back for more. That's a great sign for their brand loyalty.
Exactly. And it also suggests there could be a wave of repurchases in the coming years as those who bought vehicles during the pandemic start looking to upgrade.
Interesting point. It's like a delayed gratification scenario for Polaris. They might be feeling the pain now, but they've planted the seeds for future growth through their strong customer relationships.
That's a good way to put it.
But now Polaris has been talking a lot about this lean journey lately. And it seems like more than just cost cutting. It's almost like a philosophical shift for the company.
Yeah, I agree. It seems to be impacting everything from their manufacturing processes to their company culture.
Can you elaborate on that a bit?
Sure, they're all about eliminating waste, streamlining processes, and empowering employees to continuously improve. They're really creating a culture of continuous improvement where everyone is focused on doing more with less.
So it's not just about cutting costs, it's about transforming the way they do business. But how is this actually playing out in their day-to-day operations?
Well, one area is their inventory management. They've actually reduced their broad inventory by 25% in the past year, and they're planning further reductions in their finished goods inventory this year. This frees up cash and resources for other priorities, like paying down debt and investing in innovation.
So they're getting leaner and more agile? It sounds like they're setting the stage for a comeback once the market turns around.
Yeah, that's the big takeaway here. Polaris is facing some serious challenges, but they're not just hunkering down and waiting for the storm to pass. They're taking action, adapting, and positioning themselves for success in the long run.
Like a boxer in the ring, taking some punches but still in their seat, learning from each blow, adjusting their strategy, and waiting for the right moment to strike back.
I like that analogy. They're staying nimble, adapting to those changing market conditions.
And not afraid to make tough decisions.
But before we move on, I can't resist revisiting our This Is Not Financial Advice segment. Got any more outrageous but plausible trade ideas brewing?
Always. What if Polaris takes their partnership with Zero Motorcycles to the next level? Like create a joint venture to develop a whole new line of electric power sports vehicles?
Oh, that's an interesting one. They're already collaborating on electric motorcycles, but a full-blown joint venture would be huge. Right. Think about the possibilities. Combine Polaris's manufacturing power and market reach with Zera's electric powertrain technology. It could lead to a whole new generation of electric RZRs, sportsman ATVs, and even electric snowmobiles.
Now you're talking. An electric snowmobile. That would be something else. But let's not get too carried away. This is all hypothetical.
Of course, but it's fun to think about, right?
Absolutely. And who knows, maybe someday this wild idea will become reality. But for now, let's get back to the numbers and analyze Polaris's financial performance by segment. Stay tuned for the final part of our deep dive where we'll break down their numbers and see how each division is performing.
So welcome back to Talk Tickers, everyone. Before the break, we were talking about Polaris's cost-saving initiatives, those lean initiatives.
Right, exactly. They managed to save over $250 million last year. How'd they do that?
Well, they've been really focused on streamlining their manufacturing. For example, they've implemented these lean production lines in their Monterey, Mexico, and Huntsville, Alabama plants.
So making production more efficient.
Exactly. And these new lines have really helped reduce their variable costs.
Okay, and they mentioned additional savings projected for this year. Where are those coming from?
Well, they're expanding those lean initiatives to their plant in Roseau, Minnesota. Plus, they're tackling costs all over the place, renegotiating contracts with suppliers, optimizing their logistics, even finding ways to reduce commodity costs.
Sounds like they're leaving no stone unturned. But as you said earlier, those savings are getting kind of hidden by those lower production volumes.
Yeah, it's true. It's like good news, but hidden under bad news. They're saving money on each unit, but they're just making fewer units overall, so the impact on their profitability isn't as big.
Right, so it's like they've got this great new fuel-efficient engine, but they're stuck in traffic.
Yeah, that's a good way to put it.
All that efficiency doesn't help if they can't get things moving. And speaking of roadblocks, we can't forget those potential tariffs on Chinese imports.
Oh, you're absolutely right. Those are a big question mark, not just for Polaris, but the whole power sports industry. If those tariffs hit, it could really hurt Polaris's costs, make a big dent in their profitability.
Yeah, it's a big unknown. But even with all that, Polaris seems to be doing something right, keeping those customers happy.
That's a really good point. Their data shows that off-road vehicle ridership is actually still higher than it was before the pandemic. People are still out there enjoying their RZRs and sportsman ATVs.
So that underlying demand is there. That's encouraging.
It is. It suggests that once things get better in the economy, the power sports market could really bounce back.
Okay, so there's hope on the horizon. But you mentioned repurchase rates earlier. What's the deal with those?
Well, repurchase rates are a great way to gauge customer loyalty and future demand. And Polaris's numbers showed that their repurchase rates, for both people who've bought recently and those who bought a while back, are about the same as they were before the pandemic.
So people who buy Polaris come back for more. That says a lot about their brand.
It does, and it also suggests there could be a whole bunch of new purchases in the next few years as those who bought during the pandemic start looking to upgrade.
Interesting. So it's like delayed gratification for Polaris. Tough times now, but they've set things up for future growth.
Exactly.
Okay, so Polaris is talking a lot about their lean journey
Yeah.
lately. It seems like it's more than just cutting costs, almost a change in how they think as a company.
Yeah, I'd agree with that. It's affecting everything from how they manufacture to the company culture itself.
Can you talk a bit more about that?
Sure. They're focused on getting rid of waste, making processes simpler, giving employees more power to improve things. They're really trying to build a culture where everyone is always looking for ways to do more with less.
So it's not just saving money, it's about changing how they do everything.
Yeah, exactly.
How's that playing out in their everyday work?
Well, take inventory management. They've cut their broad inventory by 25% in the last year, and they're planning to cut even more this year. That frees up cash, resources for other things, like paying off debt and investing in new ideas.
So they're becoming leaner, more adaptable. Sounds like they're prepping for a big comeback.
That's the key point. Polaris is up against some tough stuff, but they're not just waiting for it to blow over. They're taking action, getting ready for the long haul.
Like a boxer, taking punches but staying on their feet, learning and adapting.
Great analogy, staying nimble.
Not afraid to make hard choices. Okay, before we jump to the next part, I gotta ask.
Yeah.
Any more crazy but maybe possible trade ideas?
Always. What if Polaris went even further with their Zero Motorcycles partnership? Like a joint venture to make a whole line of electric power sports vehicles.
Yeah, that's a big one. They're already working on electric motorcycles together, but a full-on joint venture, that's a game changer.
Right. Imagine it. Polaris's manufacturing and market reach combined with Zero's electric technology. Electric RZRs, sportsman ATVs, even electric snowmobiles.
Now that's thinking big. An electric snowmobile, wow. Okay, let's not get too carried away that this is all just hypothetical.
Of course, of course. But it's fun to imagine.
For sure. Who knows? Maybe it'll happen someday. But for now, back to the hard data. Time to look at Polaris's financials by segment. Stay tuned for the final part of our deep dive, where we'll break down those numbers, see how each part of the business is doing. Welcome back to the final part of Talk Ticker's deep dive into Polaris's Q4 2024 earnings call. Time to get into the details. Let's break down their performance by segment, starting with off-road vehicles. What's the story there?
Well, off-road vehicle sales were down 25% this quarter, mainly because of lower sales volume and something called a negative sales mix.
Negative sales mix. What's that mean for people who don't know the term?
Sure. Basically, it means they're selling more of their cheaper models, which brings in less profit on each sale. It's like, imagine baking a cake, but only filling half the pan. You still have all the costs, but fewer cakes to sell.
Makes sense. So fewer sales and a less profitable mix, not a good combo. But within off-road, we know snowmobiles were hit hard. What were the numbers like there?
Snowmobiles saw a decline of over 30% in both sales and retail compared to last year. So yeah, a pretty big chunk of their off-road segment.
Ouch. Those 2-week snow seasons really hurt. Okay, switching gears. What about those recreational side-by-sides? Those are usually popular, Ray.
They are. There was some growth in the crossover category, but overall, North American retail for recreational off-road vehicles was flat this quarter. The pressure on their popular RZR sales definitely weighed them down.
So off-road is facing some headwinds, both from within and outside. Let's move on to motorcycles. How did Indian motorcycles do this quarter?
Motorcycle sales were down 21%, which kind of reflects the overall challenges in the motorcycle market right now, but there's a bright spot. Remember the successful launch of that new Indian Scout lineup we talked about?
Yeah, the one that took the top market share spot in the mid-size category.
Right. That success actually led to some share gains in the quarter, proving Polaris can still compete, even in a tough market.
So it's not all bad news for Indian motorcycles. What about their heavyweight motorcycles? Are those still having trouble?
Unfortunately, yes. They're still facing pressure from new competition and people being more careful with their money. Luxury items are tough to sell when the economy's uncertain.
I get it. Okay, moving on to their marine segment. How did boat sales do this quarter?
Boat sales were down 4%, but remember, Q4 is usually a slow season for boats. The industry's really getting ready for those boat shows in the new year.
Right, so maybe not a big concern yet. What's Polaris saying about marine sales for 2025?
They're projecting low single-digit growth, driven by gaining more market share and new stuff across their three boat brands. New products and a refreshed lineup should hopefully draw in more buyers.
Sounds promising. Taking a step back, we talked about Polaris's strong financial position and their focus on keeping those investment-grade metrics. Can you remind us what their main financial priorities are right now?
Their three main priorities are investing in their core businesses, keeping their dividends strong, and paying down debt.
Smart moves in this economy. And it's worth repeating that they've increased their dividend for 29 years straight. That shows real commitment to their shareholders, even when things are tough.
Absolutely. It shows they're in it for the long haul.
Well, we've covered a lot today, from those declining sales and inventory problems to lean initiatives and the threat of tariffs. Polaris's Q4 2024 earnings call was definitely a roller coaster.
It was. But even with those challenges, Polaris is showing that they're resilient, willing to adapt to a market that's changing fast. The steps they're taking to manage inventory, streamline operations, and stay financially strong put them in a good spot for the future.
I agree. And just a reminder to everyone, while we've shared a lot of information and insights today, this is not financial advice. Always do your own research, talk to your financial advisor, and make decisions that are right for your own situation.
Good advice. Investing should always be done carefully and with all the facts.
That wraps up our deep dive into Polaris's Q4 2024 earnings call here on Talk Tickers. Thanks for joining us. We hope you found it helpful. Till next time, stay curious and stay informed.